So Rob, we've had more bad news today from Infosys, the Indian outsourcing group. What's gone wrong this time?
Well, the context is that this company has massively underperformed the Indian indexes so far this year. And this comes after late last year, the founder of the company, Narayana Murthy, came back to chair the company again, was getting the company back to basics. There was a lot of optimism, but a couple of things have happened, one of which is that some key executives have left. Company's looking for a CEO. An executive who left yesterday was a potential candidate. So more uncertainty, stock gets hit another 6 or 7%.
Not great if you own Infosys shares then. Easy to see why, if there's kind of a vacuum at the top or uncertainty at the top, people might sell down. But is it starting to look cheap in valuation terms?
You know, if you just didn't know the name of this company or where it was located or even what industry it was in, you'd look at the numbers, just a snapshot from 1 year, and say, here's a company that has return on invested capital of over 30%. It has EBITDA margins of almost 30%. It has no debt on its balance sheet. It grows its revenues double digits, and it's trading at about 15 times earnings. So knowing nothing else, you'd say, where do I sign? And strangely enough, it's been hurt by the Modi rally in Indian shares, because with the new leader of India, who is going to help Indian industry and in the Indian economy grow, what people want to be in is Indian banks, Indian energy companies, Indian industrials. So the money comes out of technology companies like Infosys and into those cyclicals. So it's been a double, triple whammy for this company.
Quite ironic that an increase in confidence in Indian shares should harm one of India's sort of bigger companies.
Right.
And strategically, is the company heading in the right direction? Its returns are pretty good. But
yeah, the returns have been good, but they've been sort of trending very slowly the wrong direction. And the story that optimists tell about that is that the company is shifting from very low value outsourcing, sort of running the simple nuts and bolts of companies' IT operations, to activities with higher intellectual property, more strategic elements, et cetera, moving up the value chain, as they say. If you believe that that's working and that the trend in slowly declining returns is going to come around, this might be a fantastic entry point. But let me put a strange dilemma to you. Suppose the Modi rally is justified and we have a richer and more prosperous India. That could potentially mean something very bad for the biggest cost on this company's P&L, which is labor. You know, this company trains thousands of young Indian university graduates every year to, work in its data farms, as it were. And if those people are richer, they're going to cost more, and the cost advantage this company has is going to erode. So, it may not be the best play on Indian prosperity, right? But it may be a good value play on growth in Europe and the United States.
Well, we have potential staffing problems at the top and potential staffing problems at the bottom of this company. No wonder the shares look cheap. Rob, thanks very much.
Thank you.